Alright, let's see how we calculate cost of sales. This is how you're going to calculate cost of sales. When you calculate cost of sales, you have to calculate it on the total sales. So basically you add your credit sales and your cash sales if they're given separately. Otherwise, cost of sales will be calculated on total sales. You calculate cost of sales on total sales, especially when you're given the percentage markup. You are given the percentage markup of 25% on sales. Alright, so what you're going to do is simply take your sales, multiply them by 100 divided by 125. You take your total sales, you multiply them by 100, you divide it by 125, it will give you your cost of sales for March. Take your total sales for April, multiply it by 100 and divide it by 125, it will give you cost of sales for April. Take your total sales for May and multiply it by 100 and divide it by 125, it will give you cost of sales for May. Then take your total sales for June, which is 266,200, multiplied by 100 divided by 25, it will give you cost of sales for June. They told you that your closing value will be 30% of the following month's cost of sales. So I'm going to take cost of sales for April and multiply them by 30%. It will give me my closing stock. Similarly, for April, take May cost of sales multiplied by 30%, it will give you closing stock for April. For May, take cost of sales for June multiplied by 30%, and it will give you closing stock for May. And obviously you don't have cost of sales for July. You just have to quickly find sales for July, and your sales for July will be your sales for July will be that is your sales for July. Then find cost of sales from that. And your cost of sales for July will be you will simply take those cost of sales and multiply them by 30%, and then it will give you closing stock for June. Note that closing stock for next year, closing stock based on next year's percentage, which is 52,800, that will be purchased in March. All right, closing stock for this year will be purchased this year. Closing stock for next year, it will be purchased next year. You understand it? Okay, so that is why my closing stock, even though it is based on the percentage of cost of sales for April, my closing stock for March, it will be 52,800. That's why I'm adding it. I'm adding it because I have purchased it this year. However, I am going to subtract last year's opening stock because last year's opening stock was purchased last year. I'm not going to purchase it this year, but that opening stock, it is included in that 160,000 rand, which is your cost of sales. Last year's closing stock was this year's cost of sales multiplied by 30%, which last month's closing stock will be this month's closing stock, will be this month's cost of sales multiplied by 30%, and that will give you 48,000. Note that for April, opening stock will be this 5,800. It will be opening stock. It will be opening stock. Last month's closing stock will be this month's opening stock. Understand that. I'm subtracting this 48 for March. I'm subtracting this 48 because it was purchased in Feb. For April, I'm subtracting this 52 because it was purchased in March. By subtracting opening stock and adding closing stock, it'll give me my total purchases for each month. Now I can start splitting my total purchases. My purchases, 60% of my purchases are on credit. So if you take 164,800 and multiply it by 60%, it'll give me my cash sales for March. Similarly, that will give you my cash sales for April. You do the same thing for May. My credit sales will simply be the same amount, but now I'm multiplying it by 40%. If 60% is cash, it means 40% will be on credit. And it'll give me my credit sales, my credit purchases, for each month. However, with my credit purchases, when I buy my credit purchases, I'm going to pay the following month. So my purchases for March will be paid in April. But when I pay them in April, I will simply get a 95%. I will only pay 95% of that because I will be given a discount of 5%. Hence, when I calculate my payments, I'm going to take my March credit sales and multiply my March credit purchases and multiply them by 95%. For May, I'm going to take my April credit purchases and multiply them by 95, and for June I will simply take my May credits purchases and multiply them by 95%. It will give me my payments for those months. That's how you calculate your payments or creditors payment for each month. If you still don't understand, please rewind this video and replay it again.